We are live. Days on inventory. What are the days of inventory in the current Phoenix area today? We're going to explore those different trends because, guys, days on inventory is that one segment that actually will tell us a story about what's actually selling here in Phoenix. If you are a homeowner, this is going to be very important to you because is your house in the segment that's actually still selling? There are homes still selling in the Phoenix area, or is it in a segment that's a little more dry, a little more slower, and not as much demand? We're going to cover all that here today on this video. And then if you're a buyer on the flip side of that coin, what does that mean for you? You're going to have more leverage and more negotiating power in certain segments, not just geographically, but also from a price point as well. Because what you think in terms of homes that are selling faster may actually not be compared to other price points on the marketplace today. So we're going to explore all of that today so you're fully informed, because that's what we're all about here at Everything Phoenix, making you fully informed. And of course, we're going to talk about a little development. This is important too, guys, because with everything going on in the economy with tariffs and everything that's happening, interest rates, what does that mean? And overall, how's the economy in Phoenix? Now, we know it's pretty strong, but we're going to talk about a few extra things that are even new when it comes to development projects around the Phoenix area. So, guys, my name is Kelly Cook. We are Everything Phoenix here on YouTube. We go live once a week, and we put out a video once a week, every Saturday at 8 a.m. local time. Now, currently, we are live on Monday afternoons around lunchtime, but we are thinking about actually moving that time to Tuesday late in the day, say 4 p.m. local time. See, we noticed that a lot more people are watching the YouTube channel around that Tuesday late afternoon, early evening time frame. So we're thinking about possibly moving that live portion of our show to that day and time. So if you have any strong comments about that, either way, let us know whether you're watching us live right now or the replay. Let us know where you're watching from and what your thoughts are. It helps curate the algorithm for better results as well. So really appreciate you guys for doing that. Where you're watching from and what comments or questions do you have? Let's make this a two-way conversation on the replay or live. All right, so we're going to jump in here and share my screen. So as you know, here's the overall market, guys. Overall market sits at 79 right now on the Cromford Market Index, okay? That is well below a balanced market. Now, we know a balanced market is between 90 and 110, and currently we're at 79, so that is not good. It's not good for a lot of reasons, because we want to have a balanced market. That's when buyers and sellers both feel decent about at least what's going on, as opposed to one party going, oh, no, and another party going, oh, yes. Now, if you think about it, what's interesting, guys, I said this before, and I'll say it again. What's interesting is a lot of times people think, well, if it's a buyer's market, which it clearly is today at 79, right, when 90 to 110 is balanced and it's at 79 currently, that is in favor of the buyer. But a lot of people think when it's a buyer's market, all the buyers are going to jump in and buy. And a lot of people think when it's a seller's market, all the sellers are going to jump in and sell. But what's odd about that whole thing is that's not the case. See, what happens is in a seller's market, everyone feels good about what's going on. Yes, even buyers. Think about that. Even buyers feel good about what's going on because they feel good that if they buy today in a seller's market, it will continue to go up because trees always grow to the heavens, right? They never stop. Well, that's not true, but that's the feeling that people have. And so they buy and they emotionally feel good about it. Sellers feel good because they're making a good amount of money, their equity is growing, and they can cash out. Now, on a buyer's market, nobody feels good, and buyers don't jump in as much as they should, okay? Nobody feels good because in the buyer's market, what happens is you have people that no one wants to catch that falling knife, right? What happens, you have people that are saying, well, I don't want to buy right now because what if it goes lower? If I buy today, even though it's a buyer's market, what if it goes lower and I miss out on buying at the bottom? But you never know you're actually at the bottom until you're out of the bottom. On the high side, the top, or low side of the bottom. You don't know you're at the top or the bottom. So timing the market is literally impossible unless you get lucky. I don't care if you're Einstein, right? Or the guy or gal with the highest IQ. You can't do it unless you just get lucky. So you can come close, of course, but you can't do it completely. So that being said, it's an interesting dichotomy about how that actually works with the human psychology of that, right? So we are in a buyer's market. You do have a great opportunity to buy right now, but could it go lower? Sure, it could. I don't have the crystal ball, but I will give you data to help you support that and make that decision as best as you possibly can. So let's dive into some more of that right now. Now, I'm showing you this right now because I want you to see what this looks like from a city standpoint. We won't spend too much time on this because this is, we kind of have a good idea where this goes. We show you guys this report a lot, but this is interesting because we're going to take this data right here on the screen today, right now, as you see, and we're going to actually roll that into what are the current trends in these geographical locations and also price point. Okay, so right now Chandler is performing the best, even though it's on a negative trend of minus 3% on the CMI. It is performing the best. Then it goes down to Avondale, which is 16 points below. So Chandler is kind of like out in its own right now. And then you have everybody from Tempe at 102, below 110, right, down to Cave Creek. You have three properties, or three, I should say, locations that are in the balanced market. Everything else is below. So let's dive in over here and let me show you what's happening. Here's days on inventory. Okay, we're gonna spend some time on the screen because it's very important. I'm gonna show you some trends. Days on inventory. Now you have the yellow line, or I'm sorry, the orange line. Holy cow, I'm not colorblind, I don't think. But there you have the orange line, which is the trend traditionally and historically speaking here in Phoenix. Okay, so right now, on average, what should be happening is that the days inventory should be at 68.2 days in all of the Maricopa County, the Phoenix MSA area. It should be, but it's not. Where is it at? It's at 120.1. So right now, if no new homes came onto the market, this is what this means. No new homes came on the market. It would take 120 days to sell all of it. Okay, but that's not realistic because obviously homes are going to continue to come on the market. Supply is going to continue to come on to the market, especially this time of year when it's technically supposed to be the better time of the year, right? April through June, people are making moves because of school and real estate transacts. Well, right now you have 120 days on market. Now this is different than days of days on market. Days on market, guys, obviously, as we all know, is when you're trying to sell a house and your home sits on the market much longer than it actually takes to sell, or maybe shorter in a good market, right? This is your days inventory, the amount of inventory that's sitting currently on the market. Okay, so now we have 68.2 is where we should be in a good, healthy, balanced market, and we're at 120. So that is a huge leverage point for the buyers. But what if we manipulated the price points, okay, and the geographical locations? So now you can see on the side here, we can go zip codes, we can go cities, we can go dwelling types, we can go price ranges. Let's go with that. I'm gonna take off all, and what we're gonna do is we're gonna go the lower price points. Boom, 100K, you can see what I'm doing here, right? And if you can't, I'll inform you here in just 2 seconds. We're gonna go all the way up to $500,000. Now I got the rainbow circling here. The data is processing, but guys, this is fun stuff. This is fun stuff. Come on, stay with me. Okay, you have days of inventory, and this is all the homes, all the properties, condos, single family homes throughout the greater Phoenix area under 500K. And look, guys, that is the biggest issue, or I should say violator, but they're not doing anything wrong. It just is what it is. But guys, that should be at 108 right now. Or excuse me, that should be at 58, 55. Holy cow. 55, and it's at 108. So you would think, now hold on, you would think that the properties that are the cheapest would be flying off the shelf even more so, right? Those are the ones that are moving. Those are the biggest buyer pools of people that can actually afford a home. They should be moving much quicker. There should be less inventory there, more demand, and here we go. That is not the case. So you guys, it's happening, and it's just the opposite. See, what's happening right now is the middle class is being squeezed. Okay, now we're not going to go into an economic diatribe here because that's not the point of this show, but the middle class in America, not just Phoenix, is being squeezed. It's being squeezed because you have the manufacturing, engineering jobs in America are the higher paying ones for the most part. I understand that's a blanket statement. For the most part, there are exceptions to that. So you have the semiconductors, right, which Phoenix is huge for. So I'm going to talk about Phoenix here because that's where we live. And in Phoenix, the manufacturing sector has really gone to the higher end of the pay scale. We're talking semiconductors, chips. We're talking the healthcare manufacturing. Yes, for healthcare products and things of that nature. Phoenix has done a really good job attracting those companies, those jobs to the Phoenix area. That's good. But when it comes to like manufacturing for lower priced widgets, let's call it, those jobs are not in Phoenix. Matter of fact, they're not in America overall. Those have been shipped overseas to different countries. Now, with the tariff thing, possibly some of those will come back. Now, people might make the argument that we don't need them to come back because where the world's going and where America being at the higher end of the forefront with technology and resources that we have, we don't need to have more of the blue collar, if you will, manufacturing jobs. Well, I would argue that you do. Now, I'm not saying the tariff situation, this is not a political thing, is the way to go, or maybe it is, maybe it isn't. But I would argue that you would need a mixture of some of that, because that if you don't, then the country that has the majority of that lower class, below blue collar, whatever, manufacturing jobs will have the control of certain aspects of the economy, because you need those lower widgets as well, right? Lower price widgets as well, not just a higher price widget. So that's an interesting concept in my opinion. But what you're seeing right here is the lower price point homes increasing in supply, and no one's buying them. Why? Because again, this is where the home buyers are competing for the rental inventory as well. A lot of home buyers that would normally afford a house under $500,000 are choosing to rent. Why? Because overall, it's still a little bit cheaper. It is. And I know some of you guys say, oh, I can't believe he said that. He's a real estate agent. All he wants to do is sell houses. Well, sure, I love to sell houses. That's what I want. That's what I'm paid to do. That's how I earn my income for me and my family, of course. But I want to do what's right for the consumer, because in the long run, and I've been doing this 20 years, guys, I plan on more willing to do this for a lot longer too. In the long run, the person who tells the truth, the person who provides the data, the facts, wins. And the person right now who's skeptical might come back and want to work with us in 5 years from now, 10 years from now, because ultimately we're telling the truth, and we can look back on it and have it memorialized, if you will, right? So this is how you gain trust, I think, through people in state, out of state, when it comes to Phoenix housing. That's what we're trying to do right now, build trust with you, our audience. So that is what's happening. The rental market is winning here in the lower price point of homes. So now let's go into the middle class. I'm not sure what that is anymore, but let's go a little bit higher on the price point. So if we go over here and we take all these price points off under $500,000, what if we did $500 to $1 million? Now that's still an expensive monthly payment. Let's call it what it is. But guys, look what happened. Look what happened. The trend, we should be at 136 days on the trend of inventory for homes between $500,000 and $1 million. And right now, we're at 123. We're not far off. We're not far off. We should be at inventory of 136. We are at 123. So we're actually below where the averages would say that we would be over the last 11 years, okay, with the trend, the averages. We're actually below that. So if you're a home seller and you're sitting there going, wow, my home's worth $800,000 and it's been on the market for 102 days, well, you're still below the average of where it should be today. And if you're a buyer on the flip side of this, as a buyer, you should be saying, oh my gosh, this home that's been on the market for 102 days, I'm going to come in and offer 100K below, 200K below. First of all, you can always do that, because there are case-specific situations where there are some people who are very motivated, and they will, if you ask, potentially go 100K, whatever it may be, off their asking price and just sell the house and be done, right? That always happens. I've been doing this 20 years, guys. We know that happens, and we're happy to have that conversation with buyer or seller or sellers alike on both sides of the fence, okay? But this is giving you hopefully a reset on where things really should be and where they are at today. Now, what if we go on the more luxury end, okay? Let's take off these segments here. Let's go $1 million to, I don't know, let's go to up to 5 million. Why not? What the heck? Look at that, guys. Now that's a very pretty penny for a house. But guys, when you look at this, the trend line would tell you the last 11 years that the days of inventory of homes between $1 million and $5 million should be 279 days on market. Look what it was back in this is 16, guys. Nobody would say that in 2016 it was a bad market, because it wasn't. It was on the recovery mode. But yet days inventory at one point were, holy smokes, the annual average 582, the running average 475 days on market to sell a house between $1 and $5 million. Now, again, that's because inflation hadn't set in and people weren't used to paying that much money for a house of what you get in the Phoenix area. Well, that has changed. Mindset has changed. So I would argue maybe back in 2016, that's more like a home. If it is at 5 million back then, it's more like a home that's like, 8 to 10 million today, right? So let's look at that. Let's look at the ultra luxury home market, right? 5 million to 10 million and 10 million up. Because we all know in PV, in certain places of Scottsdale, there are homes that are well over $10 million, right? Some have sold as well, okay? We have represented a couple clients in that scenario, so we understand that segment. In this situation, what should be the average days of inventory should be 1,046. 1,046, $499. We're still low. We're half what the inventory probably should be to what it should be for homes that are, I mean, shoot, where we're at 5 million up now. Those are expensive properties. So it gives you an inventory of to know what's actually, what does this tell you overall? Guys, this tells you to interpret some of this, right? Just put a bow on it real quick. It tells you that the luxury home market, which we all kind of knew was the case, luxury home market is doing very well. Now, could it always be doing better? Sure. If you have a house that's, $3.5 million, is it going to fly off the shelf tomorrow? Probably not. Depends where you price it. It could, but probably not. So, but it's helping you reset. And as an agent, I look at these stats, these data points every single day, literally, and it helps me really frame conversations I'm having with folks on social media through direct messaging or on the phone or text messaging, whatever it may be, so that they're aware of what's really happening, not what the media, especially the general media, is telling you is happening in the housing market, because 9 times out of 10, they will have it wrong. They'll tell you and make you believe it's what's happening, but it's not really what's happening. Furthermore, it's so specific, guys. We know real estate is location, location, location. You got the third one right. And therefore, it's very specific. And what's happening down the street, several blocks, could be different from what's happening right here on your side of the fence. Okay. Now, enough about that. We're going to go into a few extra things here. And before I go any further, I want to show you this chart one more time. Why? Because I'm going to talk about not just price points, but location. Let's go back to all for price range. Okay. Let's make sure everything's checked, all price points. Now, let's just go to Chandler. We know Chandler is producing overall the best when it comes to this right here, right? 136 on the Cromford Market Index. Now that takes into consideration supply and demand and mixes it all together. This is primarily just supply, some demand, I guess, but primarily supply inventory on the market. They're at 82.5, should be at 49. Okay, that's interesting. Let's go to Scottsdale. Scottsdale's above the averages right now. So let's see what the imbalance is in Scottsdale. 141, 104, actually a little bit better, a little bit closer together than Chandler. Okay, let's go to Glendale. Let's go out of Scottsdale. Let's uncheck that. Let's go check out Glendale, guys. Let's go to the West Valley, Glendale, Northwest Valley. Big difference, even a bigger difference, guys. About half, right? 95 to 49. Okay, that's interesting. Now Gilbert is bigger price points. Go back to the East Valley. Let's check out Gilbert with some bigger price points and doing well. Not quite half in terms of the difference. So you guys get the trend that's happening. If you have a city you want me to show right now, put it in the chat and I will pull it up for you so you can see your specific city. Or hey, you want to do a zip code? We can give you more micro and do a zip code down here. Okay, we can do that as well. If you're curious, let me know. In the meantime, I got a few more minutes here. So I'm going to cover some development stuff because that's important as well. Okay, let's look at this. How Arizona compares among states with highest home ownership costs. This is an interesting article because what it effectively says is that right now Arizona ranked number 28 with annual homeowner costs in comparison to the income people receive in Arizona. The median household income in Arizona is $69,000 with an annual homeowner cost of $18,000. That's about 27% right here, 26.9, 27% of cost owning a home in comparison to your income for the average Arizonian. Okay. Now, the most expensive state is Florida. Florida is about 40%. So again, remember 26%. Florida's 40% of their income to homeownership costs. So it's expensive more so on average to live in Florida. The cheapest state, Utah, at 20% for homeownership costs in comparison to their median income. So that's interesting. So that being said, what do you think about that? I think it's a cool stat. I mean, we're right in the middle, so we're not too heavy to the cost side. We're not too low in terms of what you can make per the home ownership cost. So not a bad, interesting thing. Now I'm going to share my screen. We're going to go and jump in a couple more articles. Taylor Morrison buys 156 acres north of Phoenix for a new master plan community, guys. And this is next to or in the ballpark of TSMC and their $165 billion campus going in called Halo Vista in North Phoenix's new tech corridor. That's right. And right by there in the area, you have Lennar, who just is a major home builder, obviously the nation's largest actually, who just won a bid on this parcel just adjacent to state land that Shea Homes and Toll Brothers got right here of just recently as well. So where is this? Well, Peoria is interesting, guys. You have Peoria right here, and you can see the TSMC is, my cursor is right, call it between the 74 and the 303 on the west side of the 17, right in this area right there. That's where Halo Vista is going in. So down the 303, it's an amazing, just really non-busy whatsoever in terms of traffic through the 303. Now that'll change in the next probably 10 to 20 years, but right now you can just fly in the 303. Right here, you run into Peoria, and all this land in here. Oops, let's zoom in. All this land is going to be even more and more valuable as all the tech jobs and companies come into this 303 corridor right through here to support TSMC and other things, amongst others, right? So you have that, and you have this whole area right in here that is just a great place to live in Northwest Valley, which is Northwest Peoria, really. You have Estancia, you have more people buying land out here now, and then you have, of course, Lake Pleasant and the whole recreational area out here that is poised to make Peoria just a phenomenal place to live and not a bad real estate play if you have a long-term perspective, which you should anyways, 5, 10, 15, 20 years. This is going to be built out. Mark my words, okay? So there you go. There's your real estate tip of the day. This is interesting, guys. Intel, this is actually, this just happened. This is breaking news, not like, everything else that news channels say. This is truly breaking news. This just happened. Intel stock rises because they sold part of their business unit, one of the business units, to Silver Lake for $9 billion. Okay, moving on. ASU, did you know, guys? ASU has $1 billion in construction projects underway around the valley. It's a university, $1 billion in construction projects. A university. That is insane. ASU is huge. They have 40,800 new students. When they class started last fall, they are one of the largest, if not the largest, public university in all of America. They are booming, and they have more projects to come down the pike. A big one, obviously, is going to be the biomedical core campus in downtown Phoenix, and of course, one up by the Mayo Clinic as well in Mayo Hospital in North Phoenix. So yeah, Sky Song, you have all kinds of things is happening, and ASU is just a monster, a huge player in the future of shaping Phoenix's local economy. Now you heard about this one, guys. This is some high level drama right here. Okay, Axon, they make like the tasers, right? Okay, and some other things. They want to do a nice little this plot of land they own right here. They want to do a big development project, which includes their headquarters, which is cool. Headquarters, right, of a major company. We would love to have that, no problem. But they're trying to sneak in, kind of, right? Sneak in a hotel and a huge apartment / condo community or complex. And a lot of people are against this, especially because the zoning isn't there. But some politicians are saying, well, there's a technicality. We can maybe pass this by and go ahead and give it to them. But a lot of people are saying, no, you should not be able to do this. Okay. But 1,900 residential units right here off the 101 loop, and a 435 unit hotel. So going back to our map, that puts you right in this loop right here under the 101 in North Scottsdale. And a lot of people, the critics already say that you shouldn't be able to do this because it's already too populated in that area and too much traffic already. So 1,900 new people right there living there. It could be good, could be bad, depends on what side of the fence you want to be on. But that is high drama in Scottsdale, Arizona right now. So we go back here and let's talk about two more things and we'll get out of this. So guys, 90-day tariff pause, okay, right there. So what does it mean for businesses? Because we're talking about Axon, we're talking about Arizona State, we're talking about Intel. Let's just stay on that business train and finish out what we're talking about here with tariffs. So all this to say, you guys have been, this is national media, right? So all you guys are keeping on touch of this, I'm sure, on top of this. But what it means is that with this 90-day pause, first the stock market went down because of these tariffs, and with the pause, it went right back up. So it's obviously a volatile time for the stock market, which is not helping stabilize mortgage rates because of the bond. They're tied to the 10-year bond, right? So that being said, what are businesses to do? Well, you got to kind of be ready to be nimble, because now there are some companies right here that are talking about increasing prices, but now they're saying that maybe they don't have to because if it all works out great. So high drama as well in our nation's economy also. So what to do there? follow the national news more so on that one, but I just wanted to touch on it because obviously we follow the national news as well to an extent, but we make it to a local flair. Speaking of local, we're going to end on this one. This is cool, guys. Arizona Cardinals, if you're an NFL fan at all, they are enlisting the great Sam Fox to design new State Farm, a luxury club in their in the football stadium, right? So there's a rendering of what it'll look like. Pretty cool. It's going to be called Casa Roja, okay, at the 50 for the 50-yard line. Now, here's another picture. There's another picture of what it looks like. Pretty cool, right? Sleek. It could be this is like Spanish design, modern design. But you have, there's Sam Fox right here. He is a brilliant entrepreneur and owns or sold, I think, a lot of the Fox concept restaurants that were that are amazing around the Phoenix area, at least. But I think he might have some ownership and some of them left. I'm not sure. But here's the 50-yard line, guys, a rendering of what those seats will look like. Now, those, for the most part, are general seats. Now, they might have the cushion back and real comfy and all that stuff, but they're right there on the 50-yard line. And you're down below, and you can see, I mean, amazing views. It'll be on the guest teams or the visiting team's sideline. But holy cow, you can see the guest sideline. You can see across to the Arizona Cardinals sideline. Of course, a phenomenal view of the game itself. And then, guess what you get to do? You get to just walk down these steps right in these little tunnels here, and you go into the phenomenal Casa Roja under the stadium, and you have this amazing game day experience with the TVs and the lounges and amazing, of course, Fox concept foods. Now, what kind of food are we talking about? We're talking about, let's see here. I just read it and I already kind of forgot it. Sorry, Sam. But we're talking, first of all, cost, membership, of course, because, membership has privileges, of course, between $15,000 and $17,000 per seat, with a handful of seats withheld for individual game sales. So if you want to just come one game and experience this, you probably can. I don't have the pricing on that. But if you want to go for season tickets, you're looking at $15,000 to $17,000 per seat. So you and your buddy want to go, you and your wife. God forbid you take you and your 2 kids. Oh my goodness, you're paying a heavy. But if you have the money and you want a different elevated game day experience, which nowadays it's all about having your elevated something experience for whatever you want to do, that would be a phenomenal ticket. I would say that'd be better than the luxury suite. Why? Because you're closer to the game. You're out with the normal fans, right? The normal fans, the peasants, if you will. No, it's not cheap to even be in a seat around there, to be honest with you. But if you want that updated game experience, upgraded game experience, that's the thing to do. Approximately 500 new seats there. It's going to be awesome. I hope I get invited by somebody to that. And if you're going to do it, invite me, invite your boy who's on here with Everything Phoenix, informing you of cool stuff like this. Put me down on your short list if you don't mind. I would love to attend a Phoenix Arizona Cardinals game with you in this experience. And maybe my kids too. My 2 boys, they play football. No, that's probably asking too much. Sorry, but okay. But nonetheless, guys, I appreciate you guys. We're gonna cut it out here right now. We're about we have a few minutes left, but we're gonna stop here short. Give your afternoon back to you. Thank you so much for watching our YouTube live channel. I really appreciate that. You have no idea how much it means to me. In the comments below, I always try to get to them as well if you're watching the replay. And guys, we're looking at moving. Set your calendars next week to Tuesday at 4 p.m. local time, Pacific Standard Time. Our YouTube live will continue then, and want to see if maybe we can get more and more people on the bus for that. If you are against it, put us in the comment below. Let us know if you're against that time and keep it rolling Monday lunchtime here locally as well. We're here to serve our people, our audience. Thank you for liking us and subscribing to us if you don't mind, and get us out to more and more people. Thank you so much for everything. We really appreciate you. And next week, Tuesday, 4 p.m., we'll see you then, unless you say otherwise. Keep it classy, Phoenix.